Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, I'm going to make my case on why you can consider buying gold, silver, and precious metals now. It's been manipulated over the last 40, 50, 60 years. And now you're going to be able to take advantage because a recession is coming. A recession is coming. Well, please stand by and let's talk about it. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, new viewers, old subscribers, old viewers, new subscribers, new members, old members. That's right, welcome back, everybody, because today we're going to go to the screen. But let me just set this up for you. Imagine, if you will, that in 1970, that's right, 50 plus years ago, gold, silver, we'll stay with those two, are selling at a certain price. Then you go up to 1980. Then it pops up due to inflation, because whenever inflation is rising, gold, silver, and precious metals used to rise. Then you fast forward to the dot-com bubble and the other recessions along the way in the late 80s and 90s. And what happens again? Gold, silver barely even moves, but it moves a little bit up. Then all of a sudden, in the 2000 era, they say, you know what? We're going to have inflation. We've been printing money since 1980, 1990, 2000. We better start manipulating this a little bit better, because we don't want these guys to have gold and silver at like $200 an ounce for silver and $2,000 for gold. So instead they make ETFs. That's right, silver dollars as well, just to make sure that you spend your money a different way. So we're going to talk about it, ladies and gentlemen. Let's go to the screen. All right, let's get into it. Straight in your face. 1970 cost of living. Look at this, ladies and gentlemen. Do you really think inflation is only 7.53 times 1970 numbers? Look at this. New house, $23,450. We'll just round up to 8 times. 8 times 23. We'll even make it better. 8 times 25 is 200K. The average price of a home, median price of a home, is $450,000 in America. Do you really think inflation is what they tell you it is? It is not. Once again, average income, $9,400 in 1970. Average income in America is under $50,000 right now. 7 times 9 is already 63. Never mind the other $400. So the average, people should be making $65,000, $66,000, $68,000 per year, average wise. Start doing the hourly on that, ladies and gentlemen. New car, $3,400 times 8. Come on. New cars cost well more than $30,000 or $25,000 these days. Minimum wage is $2.10. And notice one thing, when they're trying to pay you, all of a sudden there is no inflation. You know what minimum wage is, I think. I don't. It's either $7.50, $8.50, but that's hardly 7 times or 8 times the number. According to what they've been telling me since 1970, I should be earning 8 times. That should at least be $16, almost $17 by now. But it's not. Again, look how they're manipulating you. This is blatant. Movie tickets, I don't know about you, but movie tickets are not $8, $9. I don't know when the last time you've been to a movie, but they're more than $8 or $9, $10. Some are 15, some are $20. Gasoline 36. Come on. Come on. We know gas is more than $3.60. But gas is manipulated as well. Postage stamps, they're more than 40 cents, 48 cents. Sugar, 39. Come on. For 5 pounds. Ladies and gentlemen, this is just showing you again why there is a situation that I'm referring to may be a good time to start getting precious metals. It doesn't just have to be gold and silver. It can be platinum. It could be palladium. They've all been manipulated. So that's enough. So you can start calculating in your mind. So we'll get back to the screen because I had to show you that first, because next up I wanted to show you the US dollar has lost 87% of its value since 1970. Once again, ladies and gentlemen, get your mind in perspective, because not only is this a gold and silver discussion, but just start thinking about how things increase in value. This is 52 years. Never mind what's happened over the last 4 years. The inflationary rate is even higher than a lot of yearly annual inflation rates are. And so here you see where they say this means that today's prices are 7.53, and that's why I was using 8 times just to prove my point, because we all know the inflation numbers that they give you is bogus. And you have to ask yourself something. If the dollar has lost 87%, doesn't that mean it's only 13%? They're trying to say it's almost like it's a little under 13% is what you have left. So in other words, I put in $1 and all I have is 13 cents. That's crazy. So if you can't reverse it, is what I'm saying, now you understand. In the old days, we're going to get into the historical averages, but in the old days, up until 1980, inflation, there was a correlation with silver, precious metals, gold, silver, and precious metals. If inflation went up, gold, silver, and precious metals went up. But look at this. I just wanted to show you something. These may not be correct because this is 1975. I don't have 1970. But it's $4.55 an ounce. All right? So if you actually even believe what they're saying, everything I just mentioned, 7.53 times, 653% is what they're claiming over the last 50 years, but yet somehow the dollar has lost 87% of its value. If it's $4.55 or wait, I actually, maybe I can get down there. Let me see. Hold on a second. Maybe we are down here. Nope, this is 1975, $4.11. If you did 8 times 4, that's $32. How is it that we're at $21 an ounce right now if it was based on inflation? This is another reason to understand that they have manipulated the precious metals market. They're also holding it. And who are they? The top 10 percenters, the banks. Even your own government, their monetary fund, the International Monetary Fund, they're holding precious metals. All right, so here's what happened, just so you understand why are these spikes. Notice there's only 2 spikes here in reality. 1980 and 2009-10, after the crises, right? We're actually in a crisis now, but notice because of the manipulation, this is what happened. But this is more than enough reason to consider getting precious metals at this point, because 50 years of manipulation. They went from 1980 to basically 2010. So that's 30 years. Then you add on another 10, it's been manipulated. And since 2006, it's been manipulated. Another reason to get in. And this is silver. But this chart looks similar to no matter which precious metals you choose. I don't want to make this video too long, but I wanted to show you the other thing. Those who are buying gold, silver, and precious metals, they understand that they've been lied to. We've been lied to, ladies and gentlemen. So that's why they're adamant about buying gold, silver, and precious metals. On the other side of the fence, I have to keep it real. We have people that sell gold, silver, and precious metals in the open market. And these dealers are charging people, for instance, for silver. Silver price is $21, let's say. They're turning around and saying, hey, you're going to have to pay 25 to 30% more if you're buying silver. You're going to have to buy it from me for $26 unless you're going to be buying, 100 ounces or something. If you're just going to buy 1 ounce, 5 ounces, 10 ounces, then I'm going to charge you $25, $26 premium. That's $5. That's over 20%, ladies and gentlemen. Inflation is not, well, it could be 20% per year, but the point I'm trying to make is that's robbery. If you went down to a store and they said, hey, you can buy this product for $20, and then when you checked out, they said, it's $27, sir, or $26, sir, you'd be like, wait, what are you talking about? So when you're buying a commodity as a investment, because that's how I look at it, I'm transferring fiat money into an investment, then it has to hold its value, but I'm already paying 20%. So even if the price of silver went up 20%, I'm still breaking even if I have to convert this back into fiat. So that is one big problem. But this is why you may have to go with some other precious metals where they only charge 2%, 2.5%, such as gold, for instance. All right, gold, you could buy $1,800 an ounce of gold and it'll only be $50 fee, $40 fee. So it's huge, a big difference on what you're going to buy. But let's get into, again, the reason why you have to consider at this point to get a small portion. You guys know I'm not a big fan of 15 to 20% of your portfolio for precious metals, simply because it's been manipulated. But I am a big fan of 5% to 10%. All right. That should be somewhere in that ballpark, in my opinion. And therefore, I'm giving you reasons why I come up with that. And I want to show you now. The reason why I started at 1914 is because on this right hand side, this is the average. And so you understand, when we go to the year at the very end is going to be the average. So when I go down here to 1970 and they say 5.7%, and notice all in the 70s, it's 5.7, 4.4, 3.2, 6.2, 11%, 9%, 5. Everybody on podcast, 1977, 6.5%, 78, 7.6, 79, 11.3%, and 1980, 13.5%, and 1981, 10%. Ladies and gentlemen, you guys know here in the SSN Nation, you know already what they did in 1980, 1981. They changed from the cost of goods index to what we have now, the CPI index. CPI was changed because they threw out some of those goods, because that way they can manipulate it and make it seem like the inflation rate is lower. And therefore, why precious metals became even more valuable if the economy goes bad. And because the economy was going bad, that's why there was a spike in precious metal prices in 1980, along with the Hunt brothers. You guys got to check out the Hunt brothers. They were believing just what the stackers are believing right now. It's limited, it's precious, and if inflation, it's a hedge against inflation. The Hunt brothers was doing what people did in crypto. They were buying silver. After they bought all the silver, then they use the value of the silver as collateral to buy more silver. Sound familiar? And the Hunt brothers, even though the price escalated, guess what? They couldn't pay back their creditors. They got sued. They got in a world of hurt, but the government came to the rescue because they were a top 10%er. Go read about the Hunt brothers. All right. With all that the Hunt brothers did, it increased the value of silver and gold, but mostly silver, from a price of, let's go look at it, shall we? What was the prices? Around $5.98 in 79. And all of a sudden we get to 1980, it's 39, it's $40. But let me ask you something. If inflation is 14%, 11%, those 3 years, it's 14%, 11%. But in 1 year, it goes from $5, what was it? It was down here at $5.94, $5.84 at the end of, you go from $6 to $39. That's 7 times your value all in 1 year. This is what I expect that's going to happen in the next 2 to 3 years. Keep in mind, back then, and even in 2008, 2009 crisis in 2010, crypto did not exist. Keep in mind, all the money that was dumped into crypto over the last 12 years, that would have been put into potentially precious metals, which would have increased the value of the money. So the idea that your inflation is the only factor that brings up the price for precious metals, I think that is a fallacy. Simply because in any market you have to have demand. We do have demand, ladies and gentlemen. That's the funny part. Here's where the demand comes from. Not only from individuals around the world, but each government is selling gold, silver. There's mines all over the world for gold, silver, and precious metals. So it's not just where you can just buy it in one location, the precious metals. You can buy them from different locations. So look at 2006. That's right. How are we going to manipulate it? Well, we're going to go around as an ETF, otherwise known as S's and Sam LV, SLV. That's on the stock market. So when you're buying SLV on the stock market, that allows them to go around the world and buy up millions of ounces of physical silver. They're holding it. That means it's not liquid. That means there's demand for it. That's the beauty of this. It's almost like they're shorting themselves because they're not selling it. They're not trading it. They're just holding it, hoarding it. So it's sitting in vaults, never can be sold. Therefore, there can't be any price increase because they haven't released it on the market. Now, there's several people holding millions of ounces of physical silver. And I wanted to point out another Sprott Physical Silver Trust. Notice the price is below the silver price, which is very, very interesting. But this is P as in Paul, S as in Sam, LV, PSLV. Just to give you an idea that if you don't want to do physical, you can go here and buy this. But keep in mind, these guys are out here buying it, competing against you. So you would think that precious metal prices would escalate because you have people putting money into paper on the stock market, which is not the actual physical silver in this case. And you would think they're buying, and you would think you and I are buying, and that would increase the price. The only thing increasing are premiums. So you have to ask yourself, when will this stop? Well, it's going to stop because more inflation is going to happen. The economy is going to get worse. And that's why you have to position yourself into gold, silver, and precious metals right now. And the last, before I end this, here is JP Morgan. And these guys, I wanted to see what they actually had, but they have the largest holding of physical silver in the modern world. And they say they have accumulated 200 million ounces. It's more than that, ladies and gentlemen. That's why they're not going to tell you. So Jamie Dimon and the banks, they are not stupid. So if they're buying up gold and silver and precious metals, that means you need to as well. They're holding it for a reason. And by the way, this person says 600 million of silver is held by JP Morgan. Again, 600 million held by JP Morgan. 300 million held by a stock corporation in a vault. That's 1 billion ounces of silver held, not tradable, just sitting on the sideline, waiting for a price increase. And guess who's going to make that price increase happen? You guys. Because you're going to be the ones that's going to say, I'm going to buy it at $45. I'm going to buy it at $50 because it's generational wealth. That's when the price is going to go up. But I want to know from people down below, if it does go up to some ungodly number like it should be, $500 an ounce, then what? And by the way, I started off the video talking about how I believe it's a higher number. Well, it's simple. The reason why is when you go through and start adding this all up, they go, oh, it's 653% increase, or 7.53 times what the silver price was since 1970, or inflation prices are. But that's what gold and silver should be as well. So that is only part of the equation. We can't account for, they're not accounting for the amount of money that was printed. They're just going by the cost of goods, how much that increased, and then they changed the numbers and changed the game, and they lowered the numbers. So for the last 40 years, after 1982, 6.2, 3.2, 4.3, 1.9, 3 point. Notice they're keeping it under 4%. These are artificial numbers, ladies and gentlemen. Look at this. All in 2010, 1.6, 3.2, 2.1, 2010 to 2020. 1.3 in 2016, 2.1 in 2017, 2018, 2.4, 2019, 1.8, 2020, 1.2. Does anybody really believe in the last 2 years, 1.2% in 2020, 4.7% in 2021? You guys have been to the grocery store. You guys been to the gas station. Those things alone have almost doubled. 100% increase on grocery bills. Damn near double in gas prices. That's 100%, ladies and gentlemen. This is why this is hidden. So for the last 40 years, they've been using bogus information to give to the general public. And that's why Jamie Dimon and the central banks are sitting here hoarding all the gold, silver, and precious metals they can. Because one day, all of those 600 million ounces, can you imagine 600 million ounces and the price is $100? Just because they just held it, using your money, by the way. You have to use your own money. And that's why you have to be particular. And that's why you have to buy in now while the silver price is at 20. Remember, our Silver Stacker Challenge 3 years ago, 10 ounces, bought from APMEX, was $13.50. All right, 3 years ago. So we gained about, what is that, 50%? Inflation is even higher than that over the last 3 years. If you count 20% last year, 20% that the year before, and then if you say it was 10 to 15%, that would be 55, 60% potentially. That's what I would argue the inflation rate has been. And even higher than that if you go by food cost and gas prices and the cost of building materials. All this matters across the board. So again, think about it. You've been manipulated based on the inflation prices. Therefore, you need to get your gold, silver, and precious metals. Imagine this. What if gold, silver, and precious metals should have been, instead of $13.53 years ago, what if right now it was $45 an ounce? That's what it should be just in the last 3 years, in my estimation. Let me know what you think down below. So now you understand why now you are getting things at a discount, a huge discount. Because before the last 2 years, before an increase of 15, 20, 25% or more on inflation, you weren't going to get that increase. $13, okay, 10% increase 1 year, 10% increase another year. Okay, that could have happened. But we are basically in a situation where you're going to have to fend for yourself and you're going to have to study and do your own research. But you'll understand there is no way around it. Inflation is going to continue. The price of gold and silver is going to continue to stay down. That's why now is the time to get it. Even if you want to do your 15% or 10% or just keep on stacking. But just remember this, it's being manipulated, and they know more and more people are stacking gold and silver because the day will come to roost. And these things are going to skyrocket because once it does, people are going to be then trying to either sell it or accumulating even more. Because by rights, silver should be in. I did the numbers before and I didn't do it before I finished up this video. But if you start doing the inflationary rate and you actually bring in the real inflationary rate by adding like an additional 5% for each year, and you do 5% times 30 years, 210%, when you start really thinking about it, silver should be somewhere like the gold prices are now, like $1,000 an ounce. Gold should be something like $4,000 or $5,000 per ounce or six. It's out of control. So just do the math the other way where you're going, I'm going to use their old metric and then just add 5% on top of whatever they said because they're lying. All right, ladies and gentlemen, hopefully that helps you. Let me know what you think about this. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you're going to have to use all your bullets, all your fiat money. You're going to have to put it into places that can earn more than 10, 15, 20% annually. Even an index fund's not going to help you right now. If they earn 9% a year, so be it. But an index fund, I will have to admit, can help you because they will be buying stocks that are also below value. So when the stock market comes back up, they are going to be in good position. The same situation with precious metals. You have to buy when the price is down. How does precious metals go down from silver, for instance, 2,800? How does a gold go down from 1990? $1,990 goes down to 1,800 over the last 2 years when inflation has clearly been about 40%. Doesn't make any sense. And when it doesn't make sense, it makes sense. Now's the time to get you a little bit of gold, silver, and precious metals. And with all that said, keep your head up, keep moving, and I'm out.